Hello guys, today we're going to talk about margin level. What's margin level in Forex? And I'd like to explain in a very brief, fast way. So for those of you who don't know, margin level is basically the health of your account. So you have to keep an eye on this at all times because the higher the margin level, the safer your account is, or the healthier your account is, and the lower the margin level, the riskier or the closer to reaching a stop out, which is super risky you are. So you should be working at a safe level, and then we're gonna see what we're gonna do from this point forward. So what is the calculus, like the calculation to this? So basically margin level is equity divided by margin times 100. So equity is the amount of money you have. The margin is the margin that you're gonna use, that you're using off your capital, which is your equity, times 100, and that's gonna give you your your margin level percentage. So in this case right here, we have $10,000. So just for you to learn, you're gonna make the same the same formula with your capital, with the amount of money that you're trading with. So in this case, it's 10,000, and we're gonna use a margin of $2,000 off the $10,000 available for us to trade, which is essentially 2,000 and 20% of the capital. So it's gonna be margin level equals 10,000 divided by 2,000 times 100. So 10,000 divided by 2,000 is 5, and then times 100 is 500. So in this case scenario right here, the margin level is 500%. And this is a really safe margin level because again, you're only using 20% of your capital to do the trades. And again, you wanna have this margin level as high as possible. If it's too high though, then it's gonna be too safe. And if it's too way high and too safe, then you're probably not even gonna make any profits off of it. So again, you need to find a balance in, don't go like too low to the point where you're risking your account, but don't go too far up high to the point that you're barely making any profits, because again, you are using high risk investments, you are using Forex trading because you want to make a little more percentage every month than the normal, like stock market or even fixed income. And this is why you can be really playing too safe in here. Otherwise, pretty much makes no sense. There's no point in you putting your capital in high risk investment. So you have to find a balance in between this level. So just for example, I'm gonna use one of these accounts. That's the demo account we're gonna be using for example. So in this case, I have 10,000 in here, and then we're gonna be working on the lot size. So in this case, I'm gonna buy USD JPI, right, which is this chart right here. Hold up, let me sell it. Yeah, so I'm gonna sell this, and look at this margin level. So the margin level is super high because I'm using the lowest lot size possible for this, and it just gets that's pretty much what you're gonna do. And by the way, sorry about my English. It's just because that's not my native language, and I'm probably gonna be stuttering, and I really apologize. But again, I'm gonna do my best. So the lower the lot size, the higher the margin level here. So I'm gonna close the operation now. I'm gonna close this trade, and I'm gonna try to open it a 1.0 lot size, and I'm gonna try to sell it. So as you can see, now the margin drops to 9,000%, and it's 10 times less than what we had. We had 100,000% of margin level on the previous trade, and now we have 10 times less, which is 1,000. Yeah, sorry. We had 10,000% of margin level before, and now we have 1,000% of margin level. Again, 10 times more because one lot size is standard lot size. It's 10 times more. So that's what you're gonna be using. And again, the more your capital, the more the trade uses your capital. So say you sold this position, so you sold USD JPI, but the chart goes against you, so the chart starts going up. The more it's gonna eat up your margin level all the way down to all of your capital. So if you don't use a stop loss, you're gonna blow up your account, or you can use other strategies such as hedging or anything, but you need to have something to cover up. Otherwise, if the market like explodes up here and goes all the way up here, you're gonna lose all of your margin level, and you're gonna lose. So I'm just explaining that so you know a little bit of how the margin works in Forex and how trading works if you're a beginner. So it's pretty much it. I'm gonna show you actually on the account working, so you know exactly what you're gonna do. But that's basically it. And in this scenario right here, if you're using 20% of your account, which is $2,000, you have 500% of margin level. In this case, we are using because we're using one lot size, a standard lot size, we are already using um pretty much 10% of the account, right? Which is 1,000% of margin level. So you need to understand what are you going to trade and how are you going to trade. You need to understand the leverage of your account. Every broker has their own leverages and every trading account has their own style. So maybe there's 1 to 500 or 1 to 200, 1 to 100, and you have to be careful with this, and you also have to be careful with the lot size. So if you try to trade with a really high lot size that's way higher than your account, your account balance can support, then you're probably gonna end up blowing your account. So in this case, I'm gonna close this trade right here, and I'm gonna try to sell a 10 lot size, which is 100 times more than the first one that we had and 10 times more than the previous one that we had. So if I try to sell, I'm not even able to sell because I don't even have margin for this, right? So I'm gonna try to cut that in half for 5. And look at this. One trading order, right? I haven't even, like, the chart haven't even moved. Hasn't or haven't? I'm not sure. Well, the chart hasn't even moved yet. Well, correct me if I'm wrong. I don't even know which one's better. But the chart haven't even moved yet. And basically, you only have 100% of a margin level. And that's super risky because that means if the chart moves just a little bit, just any bit to, like, contrary to your position, which is upwards, then you're gonna blow up your account. So that's why you can be operating with too high of a lot size. You have to operate and trade with a proportional lot size. That's how you're gonna be able to make money in Forex, and that's how you're gonna be safe. So again, this thing right here doesn't work on the long term. So again, if the chart moves a little bit, we're gonna lose all of our money, right? We only have 2,894 pounds or dollars worth of margin right here, and we haven't even started the operation. So that's definitely not safe. That's super risky, and you shouldn't be doing this. If you do this on the long term, you're gonna blow up your account, and that's what most people do. They don't want to think about margin level, and they don't want to think about being careful with their trades. They just want to make money as fast as possible. And if you have this mindset of trying to make money as fast as possible, especially in Forex, that's when most people lose. So you have to watch out for this. So again, this is super, super risky. Okay, that's way higher, well, way below or lower than our safe margin level, which is 500, right? And I'm gonna close it now. And now let's see. Oh, it's too risky. And what are we gonna do to make it a lot less risky? Less risky. We're gonna go ahead and lower the lot size, of course. But 3 is still too high. I'm gonna work with 2, just for example. We're gonna try to sell. Now the margin level is 400%, but that's still way too high because again, um, the chart hasn't even moved yet, and you only have this free margin right here. So you have to really, really, really make a you have to really make a like a good calculation for you to see what is your risk reward ratio and how much do you want to risk for how much do you want to get in return, right? And every trader has their own trading appetite or risk appetite, and you need to see which one's yours or what's yours. And this way you will be able to make more money on the long term and actually be benefited from this market, which is good. It's a good market, but because a lot of people they do wrong, they end up losing money. So I hope it wasn't really too complicated. I wanted to make a really good explanation. It's probably not too good because again, sorry, it's not my native language, but I'm trying to do everything I can to help you guys understand what I'm trying to say. If you have any suggestions, please let me know down below. And subscribe for more. We're gonna be talking about Forex in this channel. We're gonna be talking a lot about Forex, a lot about stock market, how you can make your retirement plan through the markets, how to earn passive income with this, and so on, so on, so on. So thank you so much for watching it. I'll see you later. Bye. Have a good day. Thank you.